Q2 performance. It's been a little bit muted on account of seasonality. What's the outlook on project launches as well as the debt and demand trajectory? Mr. Irfan Razack, who is the chairman and managing director of the Prestige Group, now joins in. Thank you so much for taking time out, Avan. This side wanted to get in an outlook because you had earlier indicated that you're targeting close to 12,000 crores worth of pre-sales this year. Given the kind of new launches that has taken place, the pipeline in place, are you likely to cross this target?
Good morning. Yes, because we've already done 6,500 crores for the first half year. The teams are working very hard to see they're bringing new products in all the geographies that we are operating in. It's all a function of getting the approvals as quickly as possible, getting the products that are approved with RERA, and then going for the launches. I'm sure with the focused efforts that the teams are making, we should exceed the 12,000 that we had initially said.
Okay. Mr. Razack, you're also, your operating margins, they've been a little bit flat on a year-on-year basis. Given that raw material prices have now cooled down considerably compared to what we saw last year, what kind of improvement can we see in the margins for the second half of FY23? Can you give us a sense in terms of numbers, because it's currently at about 25.8%?
Yeah, I mean, if you look at our PAT margins historically, they always have been at around 10%, maybe even a little less than 10%. And actually, we should be pretty pleased that in spite of all the pressure that has happened in terms of cost increase and the labor has gone up, every particular commodity in construction has gone up. It's okay, cement and steel may have cooled down a bit, but that's not the only input that goes into construction. There are a whole lot of inputs that go in, and that is what is actually increasing our costs. So our teams are working very hard to see that there's no wastage, to see that there's no spillage, and making sure the costs are kept tight, the budgets are kept tight, and at the same time offer the product at a reasonable and affordable price to the clients. It's always been a struggle, and that struggle continues. But we have to be in business, and we also have to see the bottom line is protected. Even going forward, I don't see the bottom line picking up too much unless the selling price increases, which is going to be counterproductive for us in case we want volumes. We will not be able to do that. We have to offer a reasonable pricing to the customers, and which is affordable to each segment that we cater to. Because affordability is again a very comparative or variable term. For each segment, there's a certain affordability. Even in the luxury segment, there's an affordability. So whichever segment I'm catering to, I have to make sure that my pricing is right. And I think going forward, we protect our margins to the extent that we are doing just now.
Mr. Razack, are you ruling out then any price hikes for any of your wide, variety of offerings that you have? Because at some point you have to make up for all this raw material aberration, right?
Yeah, I mean, see, it's just not, it's unlike the interest rate or any other commodity that goes, ours is something that is, it grows slowly, and there is a gradual increase that goes on. That's why we have an average realization on each product that we sell. And that average realization is properly thought of, targeted. There's a certain amount of sales that are done when the launch happens, that always happens at a far lower price. And then as we go along, the project progresses, the construction takes the speed, and we almost in the mid-range, we slowly keep increasing it as we go along. And of course, a finished product is always much more in demand. And that's the time we get the full realization. We have to do a balance. It's far better than relying on residential projects, relying on debt, because I believe that since we do pre-sales, we should and must get the cash flows to sustain the development. And okay, initial investments that go in for land or approval, like now we are in Mumbai, apart from the land cost, the maximum amount of cost that goes in is on the approval cost. Now, if we keep on sort of balancing ourselves and have less reliance on debt, our bottom line also becomes better, and the balance sheet also looks healthier.
And could this then be a trend, you think, that prices are going to be an uptick? What you saw at the peak of COVID was the rock bottom.
No, see, a price always corrects itself slowly but surely, especially real estate and property prices in line with inflation. The more the inflation, the more the real estate prices will keep going up. And you see now, I mean, let me just give you a comparative. If you bought some real estate, say 10 years ago, and the price won't be the same as it was 10 years ago. It'll definitely be much more today. So that's the difference. So the shelf life of every real estate project is between 3 to 5 years. Maybe if it's a very large project, even spills over to the 6th year, 7th year also. But we in Prestige, we try and see that our projects, whatever big or small, we try and see that it's squeezed in to maximum of 4 years. So that's where we also get the efficiencies of operations. But then the pricing, when we sell, ultimately, initially, whoever buys, and if they hang on, basically, most of them are buying for their own use. But it's a good feeling that whatever they bought at and the price has gone up, the investment has grown. So in case there has for some emergency, they need to exit, they're exiting at a higher value. And they're able to exit also. It's not as though they're stuck with it and they can't exit and it's illiquid. So that's a good function. And today, especially post-COVID, the biggest thing is the volumes have increased. The business has increased. If you look at what our volumes were just the previous year to this year, it's 100% increase in terms of operational sales, the top line sales that are happening. Okay, in real estate today, we have a different system of accounting. That is why what we sell today, though it's called an operational result, the accounting that happens is only after the project is completed and after the title gets passed over to the customer. So till then, so it's a very important thing for us to see completions happen. And that's our focus. So every team has to work. The liaison team, the production team, as well as the marketing team, all of them have to make sure that once a product is sold, that we also produce it quickly and hand over deliveries. And that's when I can get the recognition of revenue. So we will always be having lumpy recognitions of revenue quarter on quarter. But at the end of the day, when we have the top line, we are happy.
Of course, you'll be happy if you have the top line, Mr. Razack. It's always a pleasure talking to you. This is